Welcome to the Winnipeg Business Valuation Podcast, where we dive deep into the world of business valuation and explain why understanding intangible assets is crucial for business owners. I'm Eric Jordan, a Canadian personal property appraiser, or CPPA, and former auctioneer specializing in intangible assets. Today, I'll walk you through real examples, share insights from successful Winnipeg-based businesses, and explain why hands-on business experience matters more than accounting credentials when it comes to valuing intangible assets. If you're a business owner or someone looking to buy or sell a business, this episode is for you. I want you to understand why a person with 10 years of experience owning and operating a successful business, like a Cobb's Bread Bakery, is better qualified to be trained as a business valuator than a 20-year accountant. Why is that? Because experience teaches you to recognize, measure, weigh, and put a dollar value on intangible assets, the assets that account for over 90% of a business's true value. On my website, pin.ca, you can see the 25 factors affecting business valuation, a proven methodology that highlights the importance of intangible assets. You'll also see what a 5 senses inspection report looks like. We've even provided a redacted sample for you to review. Last week, a franchise owner in RBC, one of Canada's largest banks, chose to use my 25 factors affecting business valuation process alongside the 5 senses inspection report. The goal? To produce a valuation that would be accepted by the Canada Small Business Financing Program, CSBFP. The reason for this is simple. I've built a strong relationship with CSBFP's upper management. They've relied on my advice regarding intangible assets, and I have an email trail to prove it. Every week, I'm working with a different client and bank, but the process remains the same. It's predictable, efficient, and most importantly, it's effective. Let's talk about fair market value versus tax value. Your accountant's job is to reduce your taxes, and they do that well. But I'm here to tell you that tax value doesn't matter in a business valuation. The Canadian Income Tax Act demands that intangible assets be valued, and fair market value is the standard. I start by reviewing the balance sheet to see if everything is listed at fair market value. Spoiler alert, it's not. That's where my process comes in. We normalize both the balance sheet and the profit and loss statement, ensuring that everything is valued at fair market value, including the wages of the owner, family members, and any redundant capital. Hands-on experience is recognized as important for a commercial airline captain, a head surgeon in an operating room, an art restoration specialist working on a $1 million heirloom, and this is why you need someone with hands on long-term business owner operator experience, trained to value your business and not an accounting-based academic formula. If you're spending $500,000 to buy a business, you want to know what percentage of that $500,000 is coming back to you as profit each year. Real profit, not free cash flow to owner or EBITDA. Let's be clear. Free cash flow to owner is a misleading term used by scoundrels to make you think it's profit. If you factor in fair market wages for the owner, the profit might actually be a loss. EBITDA is a fine metric for public companies, but for private businesses, it's often used to inflate value. Some people who use this term are simply ignorant. Others know better, but use it to mislead buyers. Winnipeg's startup scene is thriving, and many of its most successful businesses are built on intangible assets. Here are 7 standouts. Skip the Dishes. This food delivery giant was founded in 2012 by the Seymour brothers and later sold to Just Eat for $100 million. Bold Commerce, a 2012 startup that builds customizable e-commerce apps used by over 86,000 merchants and backed by venture capital. Calia, an online florist disrupting traditional flower delivery. Calia's growth has been funded by Connexus Credit Union. LibraStream, a digital transformation company offering augmented reality solutions, backed by Pender Ventures. Planin, a travel booking platform leveraging the creator economy, founded by former Priceline executives. The Sports Masters, a platform for masters athletes and sports enthusiasts. Fleet Hunt Technologies, a telematics provider specializing in fleet management, securing funding to grow its tech offerings. These companies didn't achieve success because of tangible assets. Their value lies in intellectual property, digital platforms, and customer relationships, all intangible assets. If you're a startup in Winnipeg, you have several funding options. Government grants and loans. Canada.ca offers grants for companies focused on intangible assets. Venture capital. Local firms back. Startups with high growth potential. Angel investors. Local entrepreneurs offer funding in exchange for equity. Asset-based lending. You can use intangible assets as collateral for loans. Crowdfunding. Use platforms like Kickstarter or Indiegogo to raise funds from the public. Incubators and accelerators. Winnipeg's Tiny Bison Ventures supports startups with resources and mentorship. I've done valuations for many franchises, but Cobb's Bread stands out. They offer exceptional support to their franchisees in supply purchasing and marketing, support that justifies their franchise fees. So, a big shout out to Cobb's Bread for setting a new standard for franchise excellence. If you're looking to understand the true value of your business, I'm here to help. We'll recognize your intangible assets and maximize your business valuation. I'm Eric Jordan, CPPA. Thanks for listening to this episode.